All right, let's do this. It is Wednesday, June 10th, 2026. Let's start off with the S&P. They tried to bounce it, but we did briefly go positive. Let's have a quick look at the smaller cycle charts. Let's even go on the 15-minute chart. So, yeah, I mean, you can see we had an opening low, 73.28. And we bounced 68 points, 73.96, and then that was it. They sold into it. We had look at the little micro bounces here. We're lasting half an hour, was typically. They had a little bounce here at 2 o'clock, rolled over again. We even printed a new not a new intraday low in the final seconds. I'm just looking at the 15-minute chart. You actually see, even when we opened, even when we had a bounce, momentum was still on the high end. I could have shorted that. Oh well. And if I was short, I probably would have bailed around here. There's no way I would have held until the close. Anyway, on a daily chart, so officially we were down 119 points, 1.6%. So this is the fourth daily decline of 6. Again, the ultimate question is 76.20 a key high? Is that it? I mean, in theory, this wave here is clearly done, right? Well, this is done, and now we're cooling back. But what is this? Is this just a multi-week cooling wave, and then we're going to blast off into September to maybe 8,000? I'm struggling to see that, but that's the obvious issue. Now, the lower we go, in theory, it makes it ever harder to get back up to 76.20 again. But anyway, Thursday. I mean, look at actually. Firstly, today's candle is just terrible. It's nothing. There's no sign of a floor there. So in theory, we're gonna drop tomorrow. Should fill orange gap. Maybe test the 50-day. And here's the thing: if we don't hold the 50-day, if we close below it tomorrow or Friday, then we should look for the 100-day. Currently 7,007. There's a lot of reasons why we should floor around 7,007. And on no realistic short-term outlook are we going to take out the 200. That's not realistic. No way. Unless, of course, Iran starts blasting energy facilities all over the Gulf region, in which case, then we'll plunge down to the orange gap. Cyclically, there's no sign of a turn yet. I would note the MACD line hasn't even turned negative yet, so that's likely to happen not tomorrow, but on Friday. So the setup for Friday and Monday isn't good at all. There's nothing particularly great here at all, is there? Let's have a look at the VIX. A lot of chop, but with momentum accelerated to the upward side. And looks like we're going to fill this gap to the 25s either tomorrow, Friday, or Monday. And on a weekly chart, I would note that the VIX momentum is due to turn positive no later than Monday. And on the upper Bollinger is offering 29 to 30. So that's the threat, and I don't think we're going to do 29 or 30 before the weekend. That does not look realistic. But we could do it Monday, Tuesday, and then roll over, and then maybe cool back to 20, you know, late June, early July. I certainly don't expect, again, anything above 30 in the near term. I mean, so at some point we're going to get another spike, aren't we? Above, 40, 50, 60. But how long until we get that? It could be months away. All right, individual stocks. Let's have a look. So Apple was I mean, they did print a lower low, lower high. It's not great. Uh, Short term bearish for the main market. Wow, look at that. Archer Aviation down 5% at $5 already. You got to wonder if the S&P does drop 25%, what's this going to be? $3? Two? Nico Eagle, yeah, this is the miners had a bad day because of gold and silver, which I'll highlight towards the end. Nothing good there. We're approaching next support of 150, 149. That's not going to hold. This break here 2 weeks ago, this was the critical, this was your first warning of trouble. Retail was somewhat resilient today. First Majestic Silver down 5% again. That is now the fourth daily close under the 200 day. This is horrible. What are we looking at here? Nines, tens. Tens look pretty easy. That's another 33% down. AMD down almost 5%. Orange Gap 50 day. Maybe tomorrow, maybe Friday or Monday. Doesn't really matter, but net bearish. Amazon set to test for 200 day, and considering the main market, if Amazon can get, remember this orange gap, this is ceasefire gap, I think. Not great at all. ASTS down 1.7%. Look, 133.87. You got to wonder how many were buying around here. Not good, is it? No sign of a turn. A few weeks ago, I would have been looking to be buying or holding Rocket Lab and ASTS into the SpaceX IPO. But nope, I managed to at least avoid being a ground down in that trade. Bearish engulfing candle in American Express. Barrick Mining down 5%. Bad. Boeing looks like it's got a tag orange, purple gap. And Bank of America at 0.2 above trend. That's surprising. Bad day for Caterpillar down 6.4%. Yellow gap, 50-day support. Might get down to orange gap. If the S&P is at 7,000, orange gap would be the equivalent. Jamaica, look at this. We have lost for 200 day. Alarm bells. Anyone normal would have bailed today. Look at the volume as well. Sellers. Sellers on the break under the 200 day. I can't blame them. This is a very bearish. This is a really that is a really bearish sell signal there. Also, we're under price support. Look at this. We're under 100. The March low has gone. Bearish. The minus. Carnival down 6%. 200 day resistance. Bearish. Leaving cliffs down 2.4. Black candle played out. Another 2.5% off Salesforce. Again, big support 163, 164. I don't think it's going to hold. If it doesn't hold in this cycle, that's a really bad sign. Disney down, Energy Transfer, Tower Touch. Ford down, Ford, 4%. Freeport down 3.4%. The yesterday's black candle played out. Google down 2.2%. Structure is a baby bear flag trapped between the 10 MA and the 50-day and orange gap. I think this is going to play out. Basic target, in my view, is around, really basic target would be 340. On no realistic outlook does the 200-day look in jeopardy in this cycle, because we're already cyclically low. But that's a flag, and we should drop for a few more days. Home Depot is stalling at the 50-day, as it did a few months ago. Kekler down 3. Intel holding up relatively. Again, air taxi struggling. Note the fact that we stalled at the 200-day and teal gap. Financials cooling back. McDonald's black candle. Meta down 2.3% to 570. Next support is red gap. Massive support around 520. Again, if 520 goes, that would be a provisional confirmation of the head and shoulders formation, which offers a crazy target of 250. And I did notice today the sequel to the social network is going to be released October 9th or so. I find that curious. Microsoft weak with the main market. Micron down almost 5%. Structures a bear flag in Micron. Netflix, micro churn. Nothing now. The NVDA down 3.7. That's the lowest close in, well, since early May. Looks like the 200 days could be challenged. And there is actually a gap here. I've not marked it on my chart, but there's a gap around 180. That's 10%-ish. And you could argue that would sync up with S&P for 7K. The Oracle's down 2.2% on the day. Today's candle was a reversal. I did see an after hours. Oracle was initially up 5%, then it was down 7%, and the last time I looked, it was down roughly 5%. Earnings were good, not surprisingly. The market was annoyed though on news that it wants to spend or wants to raise $40 billion via stock and potential convertible corporate debt. But they need to raise money, and you got to think that money's got to work its way into OpenAI, right? I bet that's what they're going to do. They're going to raise $40 billion and they'll go into OpenAI as a way to keep, again, they got to keep the bubble going as long as they can. Earnings were good. And American Silver down 4. I mean, look at this. Friday was the break. Again, I said at the time, anybody buying on Friday was just a moron. You don't buy on a break of a 200-day. I saw a lot of people turning bullish um, on Monday and Tuesday. I think, how can you be bullish gold, silver, and the miners? They broke on Friday. Anyway, Palantir down 1.4. A lot of chop though around this threshold. Red cap that's effectively filled orange gap. Don't care about rig. Rocket Lab down 2.9%. Having called from 151 to 105. Cyclically, we're on the low end, but there is no sign of a turn yet. And it does look to me that yellow gap is going to get tagged. Tomorrow, no. Might get tagged on Friday. If SpaceX gets listed and they start selling it off across the afternoon, you could have Rocket Lab down in Yellow Gap on either Friday or Monday. I like the company for the longer term, but the problem is my concern is that we're going to come down to S&P 6K. Whenever that is, I don't know when it's going to be. SMR down 7% in the nines. It's terrible. The Tesla down almost 4%. Looks like it's going to come down to 370 or so. United Airlines down 6%. Inverse to oil partly. Bearish engulfing candle in United Health. UPS, all the couriers are down. Look at that. Black candle yesterday played out bearish for Thursday. Exxon up 1% because of oil. All right, let's have a look at gold, silver, oil. Start with oil. So as I speak, oil's currently at $3.56, which is 4%, 91.76. Again, these candles don't get settled until midnight, so um, that's bullish. Momentum might turn positive on probably not tomorrow, but maybe Friday. The setup for Friday is more problematic than Thursday. And in theory, in terms of upside, we could easily go up to 100, maybe 105, 106, which is that high over there. Again, we're finding huge amount of support. 85s, 86s. This threshold here is 84s. You can argue all of this is just consolidation before the next big wave. All right, gold, silver. I mean, look at this. Oh my God, it's even worse. It's even worse than when I last looked at it. As things are, at 5:48 Eastern, gold is down $189, 4.4%, 4,071. Wow, wow. We have officially taken out the March low. We have a new cycle low. I told you. I said on Friday, if the two, I said on Friday, my rule is someone who was long silver. And like, look, I can be long silver as long as gold does not break under the 200-day. It broke it, so I sold. We've now gone from roughly what, 4,400 here, and now we're down over $330 since Friday lunchtime. Look at that! Look at the size of that candle. This is terrible. And now we've washed out all the long stops from 4,098 that I did see, and I forget who it was, but um, somebody highlighted to me today that I think it was Ryan. Oh, maybe it was anyway, whoever it was. Citigroup have a target on gold of 3,500, and I'm like, yeah, that's what I've been saying now for a while. Look at the weekly chart of gold. There it is. There's the number, 3,500. That looks pretty straightforward. Doesn't mean you can't get a couple of up weeks here and there, but 3,500 under that, you're looking at 3,000. I'm increasingly inclined to 3,000 rather than just 3.5. But 3.5 looks pretty easy now. I mean, hell, we could even print 3,500 before the end of the month. So yeah, bearish gold and the miners, of course. And let's conclude with silver. I mean, look, it's just as things are at 5:51 Eastern. Silver's down $1.92, which is 2.9%. I mean, look, I bailed out of silver when it was about 68 last Friday, around here. Monday was technically up. Tuesday, yesterday, was the first close on the 200-day since April of 2025, and now we're in the 63s. It's $5. It is $5 already below where I bailed. So my exit was extraordinarily painful, but you know, better out of it than holding on, because silver's going to go to $50. If gold 3,500 is going to equate to silver at 50, and you got to wonder, if gold is 3,000, well, what's silver going to be? 40, 35? Again, break a trend, break it for 200-day. Also, actually, I've just, of course, keep in mind the March low, 60.94. So gold has taken out the March low just early, as you saw. Silver's got to do it. Might do it tomorrow. It's probably going to do it within the next few days. This is bad. Anyway, let's end it there. I'm tired. I'm fading away. But yeah, the the only solace to me personally is that I'm not still long silver, because this trade is it was a failed trade and it just keeps falling. $50 looks easy. In fact, I didn't even note on the 200-day for the weekly 35s, which is all of this over here, all of this price clustering and 34s, 35s. And is there anything else of note? You know what? Why not? Let's highlight this. So it's June the 10th. As things are, S&P is down 313 points, 4.1%. There's 72.66. I would note, for a bearish engulfing candle, we need to close June under the May open of 72.34. And if we do, I would kind of think they were gonna, we have a good chance of coming down to 6,500 in July. Maybe this will just unravel even before Labor Day. I mean, it's entirely possible we just kind of chop around for a few months and then break down. But this downside, this isn't pretty, is it? And look at monthly momentum. At the current rate, momentum will turn negative, probably not in July, but no later than August 1st. So it looks like we're setting up for a problematic, especially more so in August. But I would be very cautious. This isn't pretty at all. We're not even halfway through the month, and even though a bounce is due, but we could certainly come down to 7,000. And I would note, actually, look at this. I'm not even noticed, of course, but 10 of May, 69.62. We should hold that and then bounce, and then we see whether we settle the month again under the May open of 72.34. Anyway, I'm tired. I should go. I wish you a good evening and a good Thursday. Good night.